Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Today, I'm going to be talking to you about two different pieces of software that you see. One is on the left side of the screen. This is market profile software. The other on the right side of the screen, this is Bookmap software. So I use the market profile software to understand the price action. Where is the market going? How much time is it spending there? How much volume is it bringing in? That gives me some insights. And then I use the Bookmap to see the order flow, to see how are things changing in the order book as we go throughout the day. Are they adding liquidity? Are they pulling it? Are they playing games with lots of icebergs? You know, these are all things that I can use to stack information together to have an edge in my trading. Okay, so I'm going to go over that in detail today, but for now, let's just start with my analysis for the morning, where I think the market might go today and what that might look like. So first, we need a context, right? Every piece of information could mean one of two things. You might see something that convinces you the market's going to go up or down. You need a context that you can put the market in to understand why it's going up or down, where that would change, and so on and so forth. So the best way to start the week is with what Jim Dalton calls the top-down approach. That is where you start by zooming all the way out and looking at monthly candles. The reason is because a lot of times when you're looking at monthly candles, you can start to recognize changes in the market or opportunities for changes in the market that you might not actually be able to see on the weekly or the daily candles. So right now I'm looking at the monthly candles here, and something jumped out at me this morning, which is we had been balancing with time, spending multiple months going sideways in a range. We broke out of that range, meaning we were balancing with price, looking for the price to come down to whatever level it takes to bring in those discount shoppers. So the way the auction process works is it's the same as like a store putting inventory on sale, right? You might walk into a store and you might see something that you really like. Let's say a leather jacket that you think is really cool, but that leather jacket costs $1,000. And you say to yourself, I love the leather jacket. I'd like to own the leather jacket, but at $1,000, it's just way too expensive. Well, then all of a sudden the store realizes they have too many of these leather jackets. No one's buying them. They're too expensive. So what do? They come up with a reason to put the jacket on sale. Whatever. It's Labor Day weekend or something like that, right? They just come up with it's Prime Day, it's Black Friday, it's whatever, right? They come up with a reason to put that item on sale so that if they reduce it, let's say by 50%, you walk by that store, you see 50% off sign, and then you think this jacket is worth $500. That I would be willing to pay, and then you go in and you buy the jacket, okay? That's a way that humans are convinced to spend money, to buy a product, to do a thing by putting it on sale, because the value changes, right? It gets cheaper. The value is better. The deal is better. Well, the same thing is happening with the stock market. If you can't bring in buyers up here at the higher levels to keep the momentum going, you got to put the market on sale. You got to make it cheaper. And then those discount shoppers step in and start saying, look, these stocks are just so cheap at these prices, I gotta have them. And they start buying where they otherwise wouldn't. Okay. So why do I bring that up? Well, we were balancing with price. Now we're balancing with time. We're balancing with time. Now we're balancing with price. We just got below these two monthly lows. So that tells me we've made a big move in price. We've just engulfed, the last 4 months worth of move up. That might be enough to start bringing in discount shoppers. Now, we don't know for sure, but that's just what catches my eye when I look at the monthly. Okay, great. No big deal. Let's zoom in a little bit and look at the weekly. See if there's any difference. Well, when you look at the weekly, you can see with a little more detail the difference between balancing with price and balancing with time. This blue box that you see right here, this represents the time that we were balancing using time. What often happens when you are balancing using time and you break out of that balance, it doesn't matter whether you break lower or you break higher, the market often needs to move at least the same range as the balance area. So if your balance area is 200 points and it breaks out, it needs to go 200 points. Okay. If that is the case, we still have a little while to go before we get to that weekly balance area breakout low. Okay, so that tells me even if I'm feeling intraday like they're trying to hammer out a low, which I do, I have to keep the context of understanding that on a weekly basis, there are still targets to the downside, and that's going to be somewhere around 56.40. Okay, now we'll zoom in a little bit and we'll take a look at the daily chart. Okay, so same thing. What do we see on the daily chart that jumps out at us? An old gap that needs to be backfilled, which, wouldn't you know, would take us right back to that area where we have now made the move necessary as the breakout of previous balance. So here is my prediction looking at these charts. And again, we're talking about a longer term basis here. I think the market wants to make a low and bounce. Maybe even today. Probably not, but maybe. It wants to make a low in here and it wants to bounce. But I suspect that that bounce will then get smacked back down unless we come back for this old gap first. If we come back for the old gap first and then we get the bounce, that could be a good bounce that continues higher. All right, so now let's zoom in even more and we'll look at the market profile chart to get some intraday levels of interest. So right now, the market is what I describe as being pinned, which basically just means the options market makers are trying to stop the market from making a large move one way or another. I would describe that pin as being somewhere around 57.70. Okay, brought it down to it, tried to push away, came back again. Tried to go lower, came back again. Tried to go lower again, came back again. Okay, so the market is pinned to this area as of right now. What would convince me that we are breaking away from this pin and the market has freedom to make its next big move? If we were to get below Friday's low today, so if we were to get below, let me zoom in, 56.74. If we were to get below 56.74 today and get new selling down there, I wouldn't worry about the pin anymore. However, prior to seeing that, prior to seeing the market push below yesterday's low or Friday's low and get new selling, I would not assume we're going lower. I would assume the higher probability would be that we would poke below and just come right back up to the pin, 57.70. Okay. So that's my first thought. If the market was pinned for the second half of last week and the overnight range over the weekend didn't go anywhere, it's probably still pinned. And so probably the higher probability is we're going to just look below and fail yesterday's low. However, if we get below Friday's low and we start to get new selling, you get bearish quick. Okay, and the first target to the downside is 56.42, which is filling an old gap that needs to be backfilled. After that, 56.29 and 56.21. Okay. So that is our downside scenario, right? Market opens, pushes below the overnight low, pushes below 56.90, gets new selling, pushes below the previous day's low, 56.74, gets new selling. We target the gap fill. Or it pushes below and reverses back up into the range. We're targeting to move back up to 57.70. Okay. What about the upside? What would that look like? Well, I do suspect if the market were to try to go higher today, it would have a very hard time of it. Okay. I'm seeing just an absolute ton of resistance in here. Right. This market is just saying, no, don't go higher. So if the market were to try to go up today, I have a feeling it would be a very grindy, choppy, combative push to the upside. It will not be easy to make a move to the upside. Okay. Doesn't mean they can't do it, but I just think it would be extremely choppy and it's not going to be like the market opens and it just goes straight up. We're just not going to get a day like that today. So what would we be looking for in that scenario? Well, the first thing we'd be looking for is resistance above. If the market starts to push higher, I'd be looking for resistance right in here around the 57.40 area. Okay. If that smacks the market down, we're looking to come back for yesterday's low, Friday's low. Okay. If it doesn't smack the market down, we're looking to get back above Friday's closing price. So back above 57.80, which is also the overnight high. And then we see if we get new buying up there. New buying up there would get me nice and bullish. So in the same way, I need to see new selling below Friday's low to really get bearish for this old gap fill and for continuation to the downside. I need to see new buying above 57.80 to really get bullish that we're going to make a move to the upside. And again, if that is the case, the first target to the upside is 57.92 and the next one is 58.20. Okay. So That's the scenario for up and down. Well, what would a scenario for the market to go sideways? Please don't be mad. Don't be mad at me. But it would likely be a very choppy, difficult sideways day like the last few that we've had. Okay. It will be a day where the market will spend hours just completely flipping and reversing, making a huge range, but it is very difficult to predict where it's going to reverse and so on and so forth. So unfortunately, we are opening in a chop zone, and I do expect a lot of chop this morning and a lot of grind. Again, that changes if we get below the overnight low, if we get below the previous day's low, but I suspect until I see that we're probably going to do a lot of chopping and grinding sideways. Okay. Any questions on any of that from the chat? The one contradiction that I would give right now to the choppy, grindy, sideways balancing day is one thing that we have had, basically all last week in the market was we had equal large nodes of liquidity, both above and below price. So before the market opened, you could see like a line of liquidity here, a line of liquidity here, a line of liquidity here. It was about equal. Today, there's a lot more liquidity below price than above. So that is slightly more bearish to see. Any questions? Also, if you are watching in the Discord, feel free to jump into the Futures-Charles tab if you want to ask me any questions. Good morning to Stephen and Trader, who is there. Welcome, welcome. As far as the YouTube chat is concerned, why so quiet? Good morning to Billy K, Street Salsa, Fairfax City Reporter, Kiwi, Gary, Jay, Trevor, Will, Knapp, and Willie T. Welcome, welcome. Any questions from anyone in the chat? So where I'm at, bigger picture, I'm bearish. Shorter term, I'm assuming choppy sideways day. And I also assume, I know this is contradictive because I'm saying I'm bearish, but whenever the market makes a low, I think it's just going to be a dead cat bounce. Good morning to Trader Luke. Matt says, just joined. Have I discussed BTC? I have not. We can take a look at the Bitcoin. Bitcoin. Yeah, there's absolutely nothing I like about that chart. That is an ugly chart. So think about the auction process like this, right? You're trying to make higher highs. That's always the goal of the market, right? To make higher highs. And so it'll go on sale as much as it needs to be able to make those higher highs. So you can see here, we made higher highs and they had to go on sale to bring in some discount shoppers. Made higher highs, had to go on sale to bring in those discount shoppers. Higher highs, sale. Tried to make higher highs and couldn't. A little bit of a deeper sale. Tried to make higher highs, couldn't. Even deeper sale. Finally made higher highs, came back down, couldn't. So then we had to put the market even more on sale to try to make those higher highs. And guess what the market is telling us now? It still can't make those higher highs. So what that means is Bitcoin has not been taken to a low enough price to bring in enough new participants who see it as being a good deal to buy at this price to take this market higher. Okay. So my prediction is we need another dip. Where was I looking? I was looking at like 70. Yeah. Okay. So I'm thinking that the market probably needs to dip down somewhere around 72 to truly bring in the buyers to start making new all-time highs. Now, that doesn't mean it's going to instantly drop straight down. It doesn't mean it's just going to be like, rah! It might be a very choppy sideways move, but I just think it needs to get down to 72 before it turns around and starts to do anything that will make anybody really care. Okay. If you are an intraday Bitcoin trader, I would say you could look for a small bounce up into the 85 area, but I'd be looking for resistance there and another smackdown. On the Bitcoin. Remember, people like to buy the rumor and sell the news. If you've been expecting President Trump to say something and you've been buying BTC because you think when he says it, it's going to go straight to the moon, and then he finally comes out and tells you what his plan is, and then you're like, whip, 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 whip. Guess what happens? A lot of those people who bought on the way up start to get out, the market starts to dip, and you have to dip far enough for people to start to say, this is a really good deal, and I got to take advantage of it. And I'm thinking 80,000 wasn't enough. Any other questions from the chat? Kiwi says, not yet. I'm not sure what I said that triggered that. Vu, good morning to you. Dave, good morning and welcome. Trevor in the house. Welcome, welcome. Does man, good morning to you in the Discord. He says, when finding HTF targets, what is your process for that? So I have a very simple approach to trades, okay? Which is, first, I have to have a bias. What do I mean when I say I have to have a bias? It means I have to truly feel confident, okay? Not guessing, not wishing, not kind of sure. I have to feel truly confident that I understand what the market is doing. I know for sure the market is going to go up or down, right? Once I have that bias, either bullish or bearish, the next goal is to find an entry to get into the trade. So this is the concept that I use to try to find my entries. I ask myself, what is an entry where I can get in with the minimum amount of risk? So that might mean I have less of a chance of getting into it, but it's just the minimum amount of risk to get into the trade. So let's say, for example, I was bearish right now, and I was thinking the market is going to go lower. I'm convinced that this morning we're heading down to test yesterday's low, which I do believe is a thing the market will do today. I would not just go short right now, right? Why? Because the market could push its way all the way back up to the 65-70 area and then still turn around and come back down to that low. So I don't want to have to accept all that risk for a small, tiny little reward. So in that case, even if I have a bearish bias, even if I have a target for where I think the market is going to go, I still can't enter the trade because the risk to reward just isn't worth it. And even though the trade might work today, this one time, if I trade like that every day, where I'm taking on massive amounts of risk in order to make a tiny little reward, I just won't be profitable, right? It's just a fundamental fact that to be profitable, the winning trades have to make you more money than the losing trades lose you. So that's my criteria for entering the trade. So in this case, I would, even if the market opened and it went down to the previous day's low, I'd rather it go without me, or wait for it to push up, wait till I see the resistance. I know I have a better risk to reward ratio, then enter the trade. Okay. Now, how do I choose my take profit targets? Well, my take profit targets is first and foremost, always a level I feel very confident the market is going to go. So we talked about, we got this gap fill down here at 56.42. Okay. That is a pretty good chance, again, if we get new selling below yesterday's low, that we're going to fill that gap, right? So let's say the market opened and it chopped sideways for a while and it's grinding and it's grinding and it's grinding. And I'm seeing some resistance and I'm saying to myself, you know what? I think that this is good resistance and we're going to head for Friday's low. So I get short right there, right? That's my trade. I'm getting short with a stop above the overnight high, targeting a move to the previous day's low. Well, then you say to me, Charles, if you think there's a chance that the market could fill the gap down to 56.42, why not just make that your target? Why not get short up here and target that? Well, because once I'm in that short up here and the market starts coming back down, there is an extremely high probability we will get to the previous day's low. But I have no clue. I have no way of predicting the probability that we get to that gap fill. So I would rather get short, take profits right there at the previous day's low, right? and then wait and see. And if at the previous day's low, we get new selling, then I can get in a second trade to fill the gap. Now I might miss some of the profits, right? I might, get short here, take profits here, and then get short here and take profits here. And so I miss out on that, 5 points or whatever while I'm making a decision in between. That to me is a better way to trade, right? To lock in the profits where you have a high probability of the market getting to that level and then just re-entering the trade if it keeps going. Now, how do I pick those levels? Those levels that I think are high probability? Well, then you'd have to take one of my courses because it is far too much to explain, in the next hour. I'm paying attention to a lot of different things. I'm paying attention to where market goes, how much time it spends there, and how much volume it brings in. I'm looking for an auction process to come to an end. Okay. An art auction, which is just an auction up, only ends when there's only one hand left, right? So it's like the auction starts and tons of people want to buy it. But the higher the price goes, there's fewer and fewer and fewer people making bids, right? As the price goes higher and higher. And then you finally get to a point where there's only one person left willing to buy that thing. Then it's going once, going twice, told to that person, right? The stock market works the same way. You got to run out of people. You got to get to that very last person before the market is ready to flip and turn around and come back down. So that's what I'm paying attention to, right? Are there areas where we don't end the auction process? Yesterday's range had two of them, one at the high and one at the low. These are both unfinished auctions, which means the market both needs to go up to Friday's high and down to Friday's low. Okay. So what does that tell me? Well, definitely we're going to do one of those two today, maybe even both, right? But we're going to have to wait and see. So if I'm looking to enter a trade and I have a bullish bias, I'm convinced the market is going to go up, my first target is going to be that poor high from the previous day. If I'm bearish and my, bias is to the downside, then I'm going to be targeting that poor low because one of these two is going to get repaired today. Okay. The odds that we just do nothing but go inside yesterday's range are pretty slim because we have a poor high and a poor low. Okay. So as I said, right now I lean more bearish, but I'm assuming it is going to be a very, very choppy sideways day. And I think a look below and fail of yesterday's low is more likely this morning. Let's see what happens when the opening bell rings in 5 minutes. Yeah. 5 momentos. Good morning to Dave, Trevor, Diogo, Kiwi. Appreciate you, brother. Zahir in the house. Been a minute, man. Good to see you. Zahir says, can you take a time to look at the NQ? I can for you. I'm talking about the NQ. Let me just very quickly look at the daily and the weekly for the NQ. Yeah, NQ's in a good place for a bounce right now. So whereas I feel like the ES on a swing basis still needs a little bit more of downside, I would say the NQ could make a low in here and reverse up and out. But as of now, the momentum is to the downside. So same as ES, the higher probability is that it's going to continue lower. But man, this would be a great place to get a dead cat bounce. A great place to reverse back up into some resistance. So let's zoom in and take a look at the intraday chart. And also just let me quickly look where the liquidity is. Yeah, same as ES, more liquidity below price. Slightly bearish to see. Okay, so I would lean more bearish this morning on the NQ, but same exact as the ES, it is going to chop. It is going to grind. So if you get below the overnight low, if you get below 19, we'll call it 860, and you start to get new selling there, you could target a move to the previous day's low because it is a poor low. So there's a magnet on price around 19,766 that wants to get tested today. Okay. So you could look for a trade if you get below the overnight low, the weekend's low. If you get below there and get new selling, that is a fair trade. You could also look for resistance in here around 2000, 2012, 20,012. You could look for some resistance in there also for a move to the downside. If it can get through 20,012 through that node right there, then you're looking at an incredibly choppy day inside what is the weekend's range. And as I said, same thing for the ES. I couldn't really get bullish unless the market got above that closing price from Friday / overnight high. So the two markets are very, very similar. It's basically the same analysis. I assume intraday today, lots of chop, but there is still a bias to the downside. Gonna be a chop, chop, choppity chop. A little choppity chop, chop, chop. Kiwi says, any thoughts on the dollar? Not really. That is not something I pay a lot of attention to. So I wouldn't really have any edge that I could provide you. Yeah, I got no edge in this. Sorry, man. I can tell you the momentum is to the downside, but they have re-entered a previous balance area. So that was this area right here. That means there is a chance you could start to have, a few weeks of sideways in here. But yeah, no, I have no real edge in this right now. All right, the market is open. Let's see what happens. So again, we're looking for the market to grind around inside the previous day's range. And if it can get below the overnight low, if it can get below 56.86 and we get new selling there, we will target a move to yesterday's low at 56.74. At this exact moment, we're not sure that's going to happen yet. We need to see that new selling. If this market is still pinned, it's going to keep coming back to 57.70. Okay. And as of Friday, it was still pinned. Okay, so inside a chop zone, it can be very difficult to know exactly where the market is going to flip and reverse, where it's going to run out of steam. So I'm going to mark a few potential resistance levels. I don't know for sure the market is going to reverse at these levels. So I wouldn't be putting like a limit sell order at one of these levels. But if we got there and then the market reversed, it would be information I could carry forward. And we'll talk about it when it happens. So that first resistance level is going to be somewhere around 57.23. We should also keep a very close eye on this node of liquidity at 56.80. If that disappears, if it just randomly poof disappears, expect the market to make a violent move as a result. Stan, what software am I using for my TPO charts? It is called Window Trader. Window spelled without W at the end. Okay, so now we're below this overnight low. This is where things potentially start to get bearish. This is what I would call a chop zone low. So if the market wants to keep going sideways, it should just poke below here and then come right back up. If it stays below this overnight low and it continues to bring in new business, that's where it starts to get bearish. And the target is the poor low at 56.74. And then we ask the same question there. So far, it's just stops getting taken out down here. Look at that. One account just got taken out for 300 contracts. Sucks to be you, bro. Well, there goes that liquidity below. Okay, yeah, they pulled most of that liquidity. That wasn't a real fill. Okay, moment of truth for the sellers. Is this just a look below and fail of the overnight low, meaning chop, 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 chop? Or do they want to take the market lower? If they want to take the market lower, they got to turn this into resistance right now. If they don't, it's more chop, my friends. Let's see what happens. Okay, back through the opening price. The chop continues. So that was the first opportunity for the bears to take control of the market, and they could not do it. All that happened was the market poked below the previous day's low, took out a bunch of stops, and then it turned around and came right back up. That is a sign that we are still chopping sideways, that we are not ready to go lower just yet. And I don't mean we can't go lower, in an hour or 2 hours, but right now the market doesn't want to go lower. It wants to go sideways inside yesterday's range. So we are now once again looking for resistance up around 57.23. Chop, 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 all day long. Chop, 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 while I sing this song. Gonna squeeze the bulls, gonna squeeze the bears. Gonna take it up and down like no one cares. So can anyone in the chat tell me why the iceberg at 56.82 is important to keep an eye on? Bookmap is telling us it's screaming from a rooftop. There's an iceberg at 56.82. What information do we carry forward seeing that that is there? Knowing that the market wants to chop, but that there's an iceberg at 82. Can anyone tell me in the chat? Come on, people now. Just think about it and just write it in the chat. Doesman says, market is looking for higher prices. No, sir. Man, there's such a delay right now. Hello? All right, I'll just tell you guys because I'm getting no response, so there must be a huge delay. Square Trader says pinned. Kind of. Close. All right, here we go. The answers are coming in. Does it stay or does it go? Okay. So what it means is that the market isn't ready to go down yet, right? We didn't have new sellers below that overnight low. But leaving this iceberg behind at 56.82 significantly increases the odds that we will come back for the low. Now, not right now because we don't have the sellers. But once the market finds resistance wherever it finds it, guess what is now a target to the downside? Getting back to that iceberg at 56.82. The market knows it's there. It knows if it comes back to 82, it can do business. So it has a much higher probability that it will. Now, again, I'm not saying go short right here because it could push all the way up to 59 before it comes back down. But once you see signs of resistance above, and you feel like the momentum up is running out and it's about to flip and reverse and come back down, if that iceberg is still sitting there at 82, boy, you have a good chance that it will come back down. If that iceberg disappears, if it just poof, disappears off the chart, well, then the reason for the market to come back down disappears, and all of a sudden the market is free to make momentum to the upside. So for the moment, it means more chop, but it allows us to have a little more confidence if we do want to sell resistance, that there is a better probability that once the market finds that resistance, once it finds those sellers, it's going to come back to 82. Again, as long as that iceberg is still there, the downside to icebergs is they can disappear at any moment, right? But as long as it's still there, it's a target for the market to come back to. Not immediately, but when we get resistance. This is how you have an edge, right? You recognize these opportunities. You're saying to yourself, I know the market can't go lower because we didn't get new sellers below the overnight low. I don't know how far up it can go, but I know once I see that resistance, once I see that it's ran out of steam to the upside and it starts coming back down, now I have a target for a trade. Ba-ba-da-ba-ba, they chop, 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 they choppity chop. Mike says, I have a question. How do I know how many contracts are waiting or what's taken out? So if you're talking about using Bookmap, if you look at this column right here, which stands for current order book, that shows you the number of limit orders that are currently in the order book. So you can look at the literal actual number if you want to know the exact number, or you can use this column right here. So on the right side of this little white line that's running up and down the screen right here. Okay. That is also the current order book, but it's just visualized as these colors. right? And obviously the darker it is, the less liquidity, the brighter it is, the more. The closer to orange or red, the more liquidity is there. Okay. So if you need to know the exact number of contracts, you can have that. Or if you just need to be able to visually see where on the chart is the most liquidity, you can see that. Okay. Now, what you cannot see is stops, right? Because the way a stop works is the order is not in the order book. The order is with your broker. So you're saying if price gets to this level, then put my order in the order book. So to predict where stops are, you have to learn to recognize locations in the chart where people will get stopped out. You know what's a great spot for people to get stopped out? The overnight low. Why? Because if people were buying in the overnight, thinking the market was going to go higher today in the regular trading hours, some of them are going to put their stops right at that overnight low. And so if the market pokes below there, suddenly new liquidity appears instantaneously. And we can see that that happened today. If I go back to the chart where I show stops and icebergs, you can see that dip below took out quite a few stops, 553. Okay. So from one account. So a lot of people got stopped out there with a lot of stops. We also see, look at the delta at the low. It's way more red, way more sellers. So if you had way more sellers at the overnight low, but yet the price turned around and went higher, what is that telling you? Those sellers were longs getting out of trades, getting liquidated, rather than new sellers that are trying to take the market lower, which just increases the odds that you got to turn around and go up to find those sellers at resistance. Okay. Okay, market getting a little resistance here. Is this enough to smack us down? So anytime we're in a chop zone, the next question we ask once we get support or resistance is what happens at the halfback. So as we come back down, I'm asking myself around 56.94, what happens there? Does the market pass right through it, or does it turn it into support for another poke at the upside? And so you say to me, you say, Charles, how do you see resistance? What makes you think it has to go down? Well, I'm looking at the taper. I'm seeing that the higher the price goes, the fewer and fewer people are willing to buy it. So again, I still think it's chop. I still think we're just going to keep going up and down, but I just think we're ready for a down push. And so then the question is, what happens at the halfback, right? What happens here at 94? Does it hold as support and take another poke at the upside, or does it not? In which case, we're coming back for that iceberg that we talked about. Moment of truth. Steven says, can someone confirm overnight POC, please? Are you talking about POC for time or for price or for volume? For volume, it's literally where price is right now. 96 is for volume. And for time, it was 49. Okay, so we're at the halfback. Now we're saying, is this going to hold as support in which case we expect it to poke back up. If not, we expect it to come down for this iceberg that we talked about, sitting at 82. Can the buyers hold it? Thob says, who controls the market? The answer is no one. No one controls the market. It is random. Now, obviously, there are people that can influence the market. I'm thinking Trump. As we know, the man can say 2 words and the market drops 200 points. So, I mean, there are definitely things that influence the market, but no one can control it. I mean, if there was an entity, that had enough power and enough wealth to truly control the market, that would be the FOMC, right? That'd be the Federal Reserve. Even the Federal Reserve never knows what the market is going to do. Every time Powell goes out to speak, he's shitting his pants because he does not know how the market is going to react. He's so cautious with every word that he says because he doesn't know how the market is going to react to what he says. And that's the reality of markets. They are random because everyone is guessing. Okay. Now, I'm not saying there aren't ways that you could, influence an individual stock, or you could influence little things here and there. The market makers and the high frequency traders love to kind of force the market to do things at exact levels. So say you have like a resistance level. Let's just take, 23 as a resistance level, and you're poking at it. They can have enough power to choose to poke through and take out those stops there. They can do that, but they can't control whether it goes up from there or turns around and goes down. That's about what happens after they poke through. Everything is random, and you'll do yourself a giant favor as a trader if you stop trying to explain everything or assuming someone's making everything happen. And you just look at it through the lens of like, everything is random and everyone is just reacting to what happens. Because then you start to see the areas on the chart where those reactions take place. And then you start to be able to tell what's happening when you get to those levels. Then you have an edge, right? Then you can be the first to enter the trade for the next thing. Now, I'm not a scalper, but just using it as an example, you could have shorted up here because of the taper in price and taken profits at the halfback because of the potential bounce. And you would have just made, 5 points, 6 points, 10 points even maybe if you'd have gotten, towards the high, you'd gotten short. Now I called for that to happen, right? Did someone tell me the magical thing? Do I have a deep state pass where I know what's going on? No, of course not. It's just, I know the market is random. So I read the data that way, and that's what gives me the edge. Okay. So please don't obsess over who's in control or why things are happening. Obsess over what the market is telling you is happening. That's all you need. Just what is the information at this exact moment telling you is happening? The fact that the overnight range just traded inside the previous day's range means that the market isn't ready to go higher or lower before the opening bell this morning. The fact that we opened inside the previous day's range increased the odds that we would need to spend some time going sideways, as we did all weekend long, inside the previous day's range before we would go higher or lower. Okay? No one decided that. That's just a mechanism that the market has to go through in order to break out of yesterday's range. It's just got to go sideways. It's got to convince a bunch of people to go short and then wipe them out, convince a bunch of people to go long and then wipe them out a couple of times, and then it'll make its move, right? And that's not based on someone being in control. That is just reading the randomized data. Okay. So while I'm talking, the market made a bit of a quick burst to the downside. So I have a feeling that was something news related. Probably no big deal. But we are now thinking the higher odds are that we're heading for the low because the halfback broke. Okay. And we're back at the opening price. So we are now looking for that move down to 26, or sorry, to 83, 56.83. Oh my God. All right. So Everything I just said, put in one box. I'm now going to talk about something different, which is this type of iceberg order that we now have. You see this iceberg right here? Do you see how it's moving with the price? As price goes up, the iceberg adjusts higher. As price goes down, the iceberg adjusts lower. You see how it's moving with price? This is not common to see, and it generally means that there are some shenanigans being played in the market. It generally leads to very choppy, tricky markets, and again, increases the odds. If that's still with price when we get below the previous day's low, in my mind, we're going to turn around and come back up. This is a sign that the market is more likely to be choppy as long as this iceberg stays tacked to price the way it currently is. This is not a common thing to see, so it's worth mentioning when you do. Man, there's definitely shenanigans happening. Look at that. Another iceberg on top of the previous iceberg. Someone is trying to convince everyone to go short here. Oh, the games they play. They play the games. Okay. So again, tricky market here. The second look below and fail of the overnight low is a little bit bullish to see, but these icebergs tell us they're not done yet with the low. So the chop will continue. If we get a poke up here, it's just to get people long so they can turn around and squeeze them again. We are in full on fuck with day trader mode right now. They are trying to get everyone short at the low just now. Now they're going to pop up and squeeze them. They're going to try to get everyone long near the high, and then they're going to pull back down again. This is maximum chop effect. Okay, so we're back at halfback. Same as before. Does it become resistance or do we poke right through? Do a little chop. Squeeze a few trades. Move up and down. Move up and down. Mike Smith says, can you tell me about the SVP? Yeah, so that is slightly different than the current order book. So the current order book, is only showing you literally what's in the order book right now. What the SVP is showing you is what has traded in this range so far. So it's just like the contracts that are already having changed hands at those levels. And the way I have mine set up is showing us the delta. Okay. So if it's a red, candle, then that was more sellers than buyers at that level when we were there. And if it's a large, then it's a lot more sellers. And if it's small, it's about the same amount, if that makes sense. So you're seeing the delta between the two there at that level. So again, when I'm starting to say, what keeps happening at the lows here, and I'm seeing that, there were more sellers there, but yet the market didn't go lower, those sellers were longs getting stopped. Because that's what we want to obsess over, especially as intraday traders. We want to obsess over who is doing business at this level, not just what business is being done. Because sure, there might be more people going long right now or more people going short right now. But if those are old business getting out of their trades, meaning somebody getting stopped, then the market's not going to keep going. Right? The market just went up to stop them out. Now it's going to reverse and go the other way. So you want to know who is doing business at these levels, old business or new business. Old business, the market reverses. New business, the market keeps going. And so that's what we obsess over. Are these new buyers or new sellers? Do we have more buyers or more sellers? Where are they doing business? What is the support and resistance levels? What happens when we get back to those the next time? Okay, so we're back for this iceberg at 82 once again. The last time they came down here, it was just to fool people. Is this the one where they're actually going to turn the overnight low into resistance and get to yesterday's low? I would now describe myself as bearish. To get to 56.74, I would need to see new selling there to be convinced that we're going to go lower. As I've said, that iceberg that is moving with price is a sign that you cannot trust what the market is doing right now. If it seems like the market is building momentum lower, it is just to trick you into going short at the lows so they can wipe you out. Okay. Scott says, run. And that's what you do. You got to know when to hold them. Know when to fold them. Know when to walk away. Know when to run. So we got a poor low on top of a poor low. That increases the odds that even if the market pushes away, it is coming back for yesterday's low. Get down, get down, get down, get down and squeeze them all. Oh man, I'm telling you guys, I know I sound like I'm, looking at a crystal ball. I really, really think they're just going to poke down and reverse violently back up. These icebergs, they're just trying to get as many people short right now as they possibly can. And they're not doing it as a favor to those shorts. That's not what they're doing. They're convincing people to short while they're accumulating their longs. I feel like they are about to pull a quick one on us. Market pokes below the previous day's low. Looks like it's liquidating. Everyone's convinced we're going to fill the old gap. Everyone on earth is short, and then whoosh, right back up to 57.70. I'm telling you, that's my prediction. That's my crystal ball, y'all. Unfortunately, I can't keep hanging out. I am eating into Bruce's time. So I unfortunately have to say goodbye here. You guys know how I feel. Bigger picture, my bearish is my bias is bearish. Intraday today, I'm looking for a look below and fail of yesterday's range. I'm looking for the market to get below yesterday's low, 74, liquidate a little bit, boom, 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 drop very quick, and then just as quick, turn around and come right back up. So good luck. Happy trading. If you'd like to learn more about how I trade, or you just like to hear my opinions on things, you can join the brigade for just $20 a month. Less than a single point on the ES. You can have this every morning. My analysis live for the first hour. We'd love to have you join. There is a link at the top of the description, piratetraders.io/join. I hope to see you all there. Members of the brigade, let's ride. Let's set sail. Today looks like it's going to be a juicy one, squeezing traders on both sides of the market. Woo! It's going to be choppy. Thank you to everyone in the Discord, and we'll see you next week. If you are not a member of the brigade, head on over to Bruce's stream and hang out with him.